So I wanted to start by talking about how prop firms work, and I'll give you a couple examples with some accounts that I'm currently trading, and I want to show you how you can get paid as a prop trader yourself. The basic process of a prop firm starts with a test that they give you. It's something called an evaluation or a combine in the case of this Topstep prop firm. And so these costs can vary from firm to firm, but you can see at Topstep, they offer three different tests. There's a 50K evaluation, 100K evaluation, or the 150K evaluation. And obviously, the higher you go up in account size, the more expensive they're going to be. I like to work with the smallest account size because I think they offer the best risk reward and they're obviously the cheapest. And so when I get evaluations that I'll show you here in a second, my goal is to take a $50,000 account to 53,000 without letting it hit a $2,000 max loss limit. And this loss limit is an end of day trailing drawdown, meaning it looks at your end of day balance. And if you've made money, it moves up in accordance with that. And then it caps at 50,000. So once you've reached your 53,000, you've passed the account, you've passed the test or the evaluation, and they move you into a simulated funded account. Well, I started, for the purposes of this video, a couple of evaluation accounts or combines, as Topstep calls them. And my goal is to reach and attain a $3,000 profit target. So I've got to take it from 50,000 to 53,000, and I have to do it over the course of at least 2 days. And so you can see day one, I'm about halfway there. If I make an additional $1,520, I'll be able to consider this account or these accounts passed, and I will move into what's called the simulated funded phase. Once you're in this simulated funded phase, you can actually build up profits and prepare to take payouts. If you don't pass these accounts within the 30-day or you hit your daily drawdown, you lose these accounts and you have to actually start over again, purchase new accounts, and start the process all over again. But for those that do pass and get funded, it brings you to phase two, the funded process, which is sim funded. So once you reach the sim funded phase and you've successfully passed your evaluation of whatever account you're trading, you'll be given a new account to start trading funded capital and growing an account. And so, for example, here is the live screen of one of my funded accounts. Now, this is no longer Topstep. This is with a firm called TopOne Futures. They offer the ability to skip the evaluation phase and go straight to funded. Now the accounts are a little bit more, but the benefit is you get to skip that entire evaluation phase and go straight to a funded account. And so you can see this was actually a $150,000 starting account. I made a little bit of money in day one. I started trading. I'm copying a second account. On this trade, I locked in $67 and I have an unrealized profit of $44 live currently on this account. And so I can move to break even. I've locked in 67 times two, so roughly $130, $140, and super small. I mean, nothing impressive in terms of dollar amount, but this money over time will grow and I'll be able to take it out once I've reached their profit targets and as long as I've followed their rules and haven't hit drawdown amounts. Most firms offer 100% of your first $10,000 with the firm. But then once you go above $10,000, they'll put you on some form of a split. Usually common in the industry is 90-10 or 80-20. So for example, if I was to request a $5,000 payout, and I'd already requested $10,000 prior, so I'd hit my cap, then I would get $5,000 deducted from my account, but I would only receive $4,000 if it was an 80-20 split, and the $1,000 would stay with the firm. But as long as you trade within their parameters and risk control measures they set up, following their rules and keeping it within their thresholds, you'll get paid. And so as long as you don't hit their daily max drawdown, most firms have a variety of rules just to make sure that you're trading responsibly and sustainably. They're all pretty similar, but rules do vary from firm to firm. And depending on your trading style, you may like one firm more than another. And so if you're wondering which firm works best for you, I recommend you check out my video where I outline my favorite prop firms and why I like trading with some firms opposed to others. Two firms that I like so far that I've highlighted in this video are Topstep, and then two is TopOne Futures. They actually use the same software as Topstep. It's called Project X. And so there's a lot of prop firms out there, essentially limitless amounts of funding available. But in a nutshell, all prop firms just want to see that you can continue to do what you did in the evaluation phase, to continue growing your account, to reach certain thresholds without hitting your drawdown amount. And if you successfully do so, you'll reach the next phase, which is a live funding account. Now, the live funding phase usually happens when you've built up a big enough account balance and that the firm deems that you're ready to receive this amount. And so they'll allow you to take some of your total balance as a final payout and then move the rest to a live funded account. So up to this point, you would have been trading simulated charts that completely mimic and follow the true exchanges, but the price and everything follows the real markets, but your orders are not actually showing up on the exchanges. Now, if you successfully pass the evaluation, you take a couple of payouts or grow your account to a point where they want to put you live, that changes. And now you're actually routing orders through the exchanges and you're placing true orders. Another way I've heard of people being moved is if you've taken a specific number of payouts within the same account. So if you take this account and you've taken 5 payouts with a single account, some firms will move you to live at that point. Other firms have starter accounts where I think if you take a fewer amount of payouts, then you'll actually get moved to live with a smaller account balance at that firm. Again, it's all different. You just have to do your research and decide which firm you like best and which one you want to work with going long term. I would estimate that only around 1% of traders actually make it to the live funding account stage. But take it from me, someone who's taken thousands in payouts, but is still currently working towards live account at a variety of firms. And as you can see, there's no shortage to funding. There's literally thousands of firms out there, and there's more and more growing every day. I'll provide my list of my top firms below, but there's usually the big 3 or 4. Some of my favorites are actually showing up on this screen right now. Take Profit Trader is really cool in the fact that you can take payouts on day 1, but the downside is they have intraday trailing drawdown on your funded accounts. TopOne Futures is the account that I demoed on the last screen where I locked in that solid whopping $100 trade. Topstep is the firm that I was demoing in the beginning. The truth is just try out a few firms, research, watch videos like these to figure out what rules maybe suit your personality better. So as a summary, prop firms allow you to prove yourself as a trader, and they provide you with sim funded, live funded accounts, which you can take payouts and move to a live account with the firm. Many people ask me, where do prop firms get their funding? And my answer is just like any other business, they start out with either debt or equity holders. They provide capital. But then once the business grows from there, it's truly funded through the failure of other traders. Each time you fail a simulated account, they keep that money and they don't have to pay it out unless another trader requests. And they use the money from the failed accounts to pay out successful traders. And so some people see this as a dark side of prop trading. I've always said that this is no different than trading in the open market. For example, if you buy a call option on Nvidia that expires worthless, you lose 100% of the price or the cost of that contract. And so you would lose 100%, but the person who wrote the option seller, whether it's a dealer or a market maker, an individual, whoever it may be, they would keep 100% of the value that they sold to you. And in the same way as a prop firm, there's a clear winner and a loser. And this principle holds in a market in general. There's always a winner and a loser, but it's the patient, the discipline that will come out on top. So if you like today's video on prop firms or have any questions that I left unanswered, please feel free to leave a comment below. If you'd like to see more, hit that subscribe button, like and follow the page, and follow on for more. We live stream almost daily here on YouTube, and so hit subscribe to get notified when that will happen next. Thanks again for tuning in, and best of luck on your funded trading journey. Peace.